Good evening, everyone. I hope you had a fantastic weekend. This is George from GettingMarketMoney.com, recapping today's markets. We didn't have any major news releases in terms of fundamentals. For those interested, New Zealand is releasing inflation expectations at 11 p.m. So for Asian session traders, you could squeeze some points there. For tomorrow, we have two major news releases: the core retail sales. And by major, I mean two that I will be paying attention to specifically. Core retail sales expected to come out at 0.1% for Canada, coming out at 8:30 a.m. And USD existing home sales at 10 a.m. expected to come out at 4.68 million. However, I think it's going to do less than stellar. I wouldn't be surprised to see something in the ballpark of 4.25 million. Remember, this is adjusted to an annual figure, so it's annualized. And we'll see what happens. The United States housing market isn't exactly at its peak. It's not expanding, it's not growing, it's in fact contracting. They're still giving out subprime mortgages, and those adjustable rates will eventually revert from the teaser to the actual rate, and people's hands will be cuffed, and those houses will be lost. Now, hope you guys can't hear the police in the background. They're not coming for me, I promise you. And if they are, I'll get a chance to finish this before I attend to them. So anyways, that's in the way of fundamental news for tomorrow. What you're seeing here is the equity markets as of now. As you can see, all the equity markets are down right across the board. We expected this. We were waiting for this. It's no surprise. I am profiting from it. So in this situation, it is a great outcome for a good trade that we've been planning. As you can see, S&P 500 down a little under 0.5%, along with the Dow. Now in the aftermarket, it actually traded even lower, so they are down further, about 0.25%. So we're down, as you can see here, the S&P 500 chart, the short term, and I'm going to do an in-depth analysis of S&P 500 today. But as you can see, key support will be broken, and down we go. But we will wait for that. So it's looking pretty bleak. Picture's grim. Fortunately, so too is gold, and it is down. And I myself have a position in gold, so that's bad news. However, it's offset by the gains. Here we're looking at Euro USD on the 4-hour chart. What we see is a trend line that has been clearly broken, and support level has gone. So we are bullish, and this has happened twice now. One break, dropped down, found itself some resistance around this level, which is the red circle. After it took a breather and the EMAs caught up with it, downwards it went, and now it is finding support once again at this level. From here we can see a quick bounce to the upside, nothing major. So those who are short euro, I wouldn't exit, but if you are not short euro, I wouldn't exactly enter it right now either. Although, as you can see the green line here, I have entered it myself. Remember, there's a big difference between mental capital and profits. I am just risking but a small portion of my profit. This is purely speculative. I don't recommend it. Wait for the bounce up. But that being said, it can just as easily fall to 125.35. So without any risk, there will be no reward. Nothing ventured, nothing gained. The next downside target I see is 124.30 after we get a nice pop back up. Just get the tool here. You can see a pop back up even to this level. I'm still looking for downside, maybe another bounce, and down we go to the 124.30. It's only a matter of time before that happens, and we'll find some support at this level, and we'll probably bounce around for a few days. Euro USD has been extremely volatile in the last few sessions. The euro is giving away to weakness, and the US dollar is strengthening based on flight to safety. Now people are looking for safety. US dollar is a traditional safe haven status. We could go into that and argue and debate it, but that alone will take an hour. There's some great points for and against. Maybe we could have a massive discussion towards the year end, and let everyone's opinion be heard. Fortunately, we don't have time for that now, so we go over to the next chart, GBP USD. This is a trade that you would have to separate from the fundamentals and look at on a purely technical level, and this is why I like it, because a key support level has been broken. It's now at the 200 EMA level, and let me just highlight that here, around this zone. I like it there for a short or to go long. I mean, if it pops back up, we can see 157, but I doubt that GBP will be seeing strength in light of a strong US dollar. So I think that green arrow is a bit dramatic, maybe a little jump. If we draw a trend line of this nature, probably better to draw a straight one, isn't it? See here. So there you have it. You might just see a bit of a bounce here and bounce around and then head on down, as already highlighted. I like this trade. I think we can see the 50 retracement, which is, this is a 50% Fibonacci level, and I think it's highly possible. I mean, as GBP weakens, the US dollar strengthens, which is in line with the prediction on the euro. And you really want to, when you're trading Forex, you want to have the big picture, and you want it to trickle down from that in terms of your position. You don't want to go in and start taking opposite positions and create a mumbo jumbo of, it'll be a mess essentially. Don't want to do that unless it's on purpose and you're trying to go for a hedge. Myself, I move forward as promised to the S&P 500 analysis, and this goes hand in hand with the equity markets in general. S&P 500 is positively correlated to a lot of the charts out there. You'll notice that the Dow Jones Industrial, the Transportation Index, oil. In fact, I even mapped the Baltic Dry Index, which measures shipment and movement of physical goods. Even that is on a correlation on the long term. So a lot of the things are correlated to it, so I look towards S&P 500 for equity market health, trends, whatever you want to call it. Here it goes. This is a snapshot from stockcharts.com. It's S&P 500 SPY ETF. Some of the information is cut out. I have a better system for doing Fibonacci's. Unfortunately, I can't post screenshots. It's a proprietary system. I don't want to stir the pot, cause some trouble here. But what we see is a clear, excuse me about that there. Just back away from the mic a little bit here. What we see is a clear downtrend, possible head and shoulders, as I've highlighted, and being head here, shoulder 1, shoulder 2. As you can see, if this trend line here gives way, we are down for a massive slide down to the 50% Fibonacci, which is at approximately 91 to 92.5 on the ETF. And as you can see also, there is going to be significant resistance by this price action here and here. You will definitely see that act as a resistance. However, that being said, that is 10 points away, which is a significant drop in the S&P 500. God forbid that happens, because it's going to be in chaos. But if it does, I expect it to pop to the downside, and we definitely get our first run here, that I've highlighted, in the next week to week and a half, even 2. September and October have historically been horrible months in equity markets. Don't want to mess with it there to the upside. So unfortunately, I see it popping down from a break of support levels, dropping down to about 95 or so at the very least. I am short right now. I don't want to say be happy doing that, because I never want to be happy on someone else's loss. However, it's a zero-sum game and the numbers add up. I'm going to be up, and I'm going to ensure that. That's the way it's looking. It's a very bearish chart. No matter how you want to slice it, it's creating lower highs and lower lows, and that to me is a scary indicator. See what happens. Either way, I've said too much. I'm going to cut it short here, and I hope you guys have a fantastic trading day tomorrow. Remember, you can contact me at george@gettingmarketmoney.com, and I will try to get back to you as soon as possible. If not, I will. I mean, there's no excuses there. I will get back to you. Just allow for some time. And other than that, I mean, great trade so far. Those of you that have been able to follow along have been making money. We're in the green. Those that haven't, there's always more opportunity. Don't feel rushed to enter a trade. Remember, it's better to not trade than to trade and lose. You make more money staying on the sidelines. Have a great market day tomorrow. Take care of yourselves. This is George from Getting Market Money. Bye bye.